Okay, so good evening, students. Welcome to last but one day of this classes for paper 7A Enterprise Information System. Welcome all. I think it's getting colder and colder. Those from North India, they must be feeling the cold winters. I have it in my hometown also. I don't know exactly how things are in South India is also cold, but reasonably comfortable. So let us see who has win the e-chocolate for first login today. So it's Dhyanesh, Jyoti, Nipun, oh, good, a new name, Jash, then Alok, Vidika, Bal Vinodhini, Parthasarthi, Manoj, and Mitesh Bhai. So the first three were Dhyanesh, Jyoti, and Nipun. Great. So let us start. Put your queries. We have got a very good case study based MCQ today. So it will be a really learning discussion. So Bombay must be enjoying Jash because it's very rare that Bombay gets such a cold day. And you had that very good marathon in Bombay. Okay, so anyone who participated in the marathon, please put your name here. Okay, so let us continue. So standard, we will be talking of some banking frauds. The idea about discussing banking frauds is to identify the modus operandi lacunas in those system. When we discuss about people, those who are involved in those banking fraud, our understanding is to bring about the issue of system rather than we are not interested in talking about people. We are interested in talking about system processes. What led to that, those frauds? Okay. So learning outcomes. So here it is. So let us go to, this is day 2. We have some two or three pending slides from day 1. So let me bring that. Just give me a second. Yeah. So we were basically on this implementation we talked about. So there this implementation is given in the module. Now, please understand that at your level, how you deploy a core banking system is going to be a very different life like that. But what you need to understand that whenever you, so what we are, I'm basically bringing that issue to you for your learning purposes. Okay. So understand that suppose what, okay, let us do this as a case. What you do, suppose it's an opportunity that comes to you and a core banking system has to be implemented in a bank. Okay. And imagine that you are that capable. So let us learn because see what I have understood from all the good answers you give that you all have very good understanding of how things have to be. The only thing is it has to be put in structure. Now, just understand this one that suppose this question comes to you that core banking system has to be implemented in a bank. So just put each one of you will put only one or two words that this aspect I will check to see how that core banking system can be implemented in a bank. Okay. So what I want you to give in the chat that this is one thing that I'm going to look for. While to I'll just keep a note of what you are going to say, and then based on that we will create a like a framework that whenever a core banking system is implemented, these are the aspects that need to be looked into. So what I expect from all of you is in the chat put what one or two things you are going to look for when you are going for implementation of core banking system of a bank. And there are no restrictions. You have your own calculation about the size, the location, the geography, and just give me 1-2 word about that implementation. Great, Jash. Chess marathon, fantastic. Okay, so just giving you 30 seconds to go about that. Yeah, so, okay. So we have Alok says data center, data recovery center, fantastic Alok. Concept of internal control, very good. Network availability, fantastic. Balavinodini. Jyoti, software implementation, security. So let us take it as a case study. Let us learn. So please understand that when you talk about implementation of any system for any organization, in our case, it's a bank. So it is going to be dealing with public money, public funds. So whatever system you are going to implement, what things you must be ticking off. This list we are going to generate. Okay. Okay. So it is size of the bank. If you read the case study in the module, so it talks about the size of the bank, the future expansion plan. So what you are basically interested in listing, what is the present size of the organization? What is the future size? Say how organization plans itself in the next 5 years, what expansion plan they have. So the present size, the future size first, then the nature of services the organization wish to give it to its customer, the present services, the add-on services that they are going to do with new system implementation, and possible future services. For sake of understanding, I'm referring to those services so that you can just draw conclusions. Say, for example, many cooperative banks recently have started providing ATM services to their client. So now cooperative banks have created system where their data center has been linked to core banking software of the National Payment Corporation of India switch, and so that the customers of the cooperative bank can access ATM all across the India. So that is how you have to calculate that how your system is going to work like. So this calculation you have to do. Then, so present system, the projected system, present geography, how many branches, head office you have, proposed geography, present services, proposed services. Then once you consolidate all these aspects, present number of users, possible proposed system, the new number of users, the geographical spread, then the nature of networking, then data center security, internal control, procedure, standard operating procedures, all these are part of implementation for bank. Then customer feedback mechanism. So, and just for imagination, we shared that functional architecture given in the module. So that functional architecture is like a standard template. You can reduce, add to that template. Good. Then implementation of core banking system. So this is how you are going to go about the planning, the approval, the selection, design, development, procure, testing, and implementation. Now, what you're reading on the slide, these are basically standard steps for implementing what we call a standard system design lifecycle approach of implementing system. So that is how you go about. So planning those aspects I said, approval by the top management, selection from the available software systems, designing, development, testing, and implementing. Then maintenance, support, updation, and audit of your core banking system, how it is working. So components and architecture of core banking system, these are the aspects to be talked about. Now coming to core banking system risk, security, and controls. Risk associated with core banking system, the security policy of core banking system, the internal control system and bank. Will take one by one. Now, this is very important when you talk about risk associated with core banking system. So please understand each header, each line that ends with risk is a big topic to be discussed only for your sake. Okay. Suppose I say Basel, BASEL. Does it have any relevance to banks? Basel, BASEL. So you have to say yes, no. Basel, BASEL. Does it have any relevance to bank per se? Say yes, no. Okay. So you answer that. So once you answer, I'll get back to that word. So the word is Basel, BASEL, and you are answering whether it has relevance to bank per se. Yeah, is that word related to bank like that? Okay. Now, so what we are reading is risk, operational risk, credit risk, market risk, strategic risk, IT risk in detail that will take in more detail. Now, when you say operational risk means it includes the basic operations of the bank, including the transaction processing, information security, legal compliance, and people risk. So each risk is going to have its parameters, its vulnerability, threat assessment, and based on that, we are going to create a like a matrix of what risk the bank is going to face about. Then credit risk. Credit risk means like just as an example, during COVID, because many industries were hit very hard, so banks are faced with the credit risk because the person to whom bank has given, say for example, bank has given loan to hotels. No, hotels were just not in position to pay back because they were all closed. So that creates the risk whether the to whomsoever bank has given credit, he or she is will be able to repay or not. Market. Now, a situation that comes in like present geopolitical situation, then strategic risk, the nature of operation, the nature of business. IT risk will be talking in more detail. Now, okay, so please understand. Yes, Basel. Good. So Pranay has asked the question. Let me go. So BASEL, Basel is basically a town in Switzerland. Basel is where all the central bankers of the world, our Reserve Bank of India governor included, they meet. There's an annual meeting and they have a monthly, bi-monthly, quarterly meeting based on the necessity of it. So all these central bankers of the world meet in Basel. What they are doing? So what they do, they basically make assessment of the macroeconomic scenario across the world. वो पूरे दुनिया में जो मैक्रो इकोनॉमिक सिनारियो है उसका डिटेल्ड असेसमेंट करते हैं और फिर उसके बेस्ड ऑन दैट असेसमेंट what they basically do, make a judgment on what are the risk bankers are facing. Say today, the geopolitics situation, Russia, Ukraine war. So it's creating a different category of risk all across the world. The concern of all bankers in all countries is inflation. So which whatever might be the last meeting when the all central bankers met in that city of Basel, they talked about the situation about the geopolitical situation, Russia Ukraine war, how it is impacting countries, how it is impacting businesses in country, what are the risk parameters based on that war. So all this is basically made an assessment in a location called as Basel. Basel is a name of city, but because all central bankers meet there and then they draft guidelines for all banks across the world to comply with. So Reserve Bank of India is a banking regulator in India. So the governor of Reserve Bank of India, he or she is going to go to Basel. All central bankers are going to meet there. They are going to conclude on some policy guidelines. A policy will be drafted. Those are what is called as Basel norms. Then all central bankers agree that this is what has to be done. So that policy norm is brought from Basel to India. Then Reserve Bank of India, being regulator, circulates those policy norms to the commercial bank and cooperative bank and regional rural bank, and then they are supposed to implement those. These norms are called as Basel norms, and today the status is the Basel 3 category norms are there. In fact, you're in audit, you have read those capital risk adjusted assets, the risk weighting given to the assets, tier 1, tier 2, tier 3. You have read those words. Please say yes. Tier 1, tier 3, tier 2, tier 3 capital, subordinated debt. So all these definitions are basically from Basel norm. Now, why I brought it for all of you to understand. So please understand that whatever you are reading here is a risk parameter to a bank. And now because bank is using core banking system, so all these parameters to the extent possible have to be brought in the core banking system. It's a very good discussion. We'll just take one step ahead on this. You know, CRR, we talked about cash reserve ratio, SLR, statutory liquidity ratio, ALM, asset liability management. These are all risk managing frameworks where the definition of the risk management frameworks have been created ideally in Basel. They are part of Basel norm. So those definitions have been created. Now these definitions have to be incorporated in core banking system. And when you incorporate this risk definition, these are the parameters which a core banking system needs to address to, because all banking is 100% system driven. So if you talk about risk per se, it has to be part of your core banking system. Okay. So that is what we were looking at. It's a very good discussion. It's a learning discussion. The intensity is very high. Just understand that in the module, for each of these, you have one para, 6 line, 8 lines. But practically, this is one of the most critical aspect that banker from regulation compliance part looks, that how all this can be made incorporated in system for better compliances. And then we are talking of IT risk in detail, because our topic is technology. So IT risk is technology related risks. Now just understand, like you all of you said, that data center, disaster recovery center, what are the issues? Let us read. So once the complete business is captured by technology, processes are automated in core banking system, the data center of the bank, customers, management, and everyone is dependent on the data center. So that is there. In fact, now that instance is low, but all of us 5 years back, or if you have not gone to bank 5 years back, take me as an example. 5 years back, sometimes you go to the bank. So there was a placard displayed, network not available, bank branch is not working. अब उस तरह की स्थिति बहुत 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 कम हो गई है. भारत में नेटवर्क की अवेलेबिलिटी बहुत बढ़ गई है, because the availability of internet in our country has increased phenomenally, both in terms of quantity and quality. So you don't see a shutdown of a bank branch due to non-availability of network, but still it is not at zero level. This is what is a reflection of the dependence of banking operation on technology. So if internet is not there, the bank is not going to work. So customer is all people are dependent on bank, and everything is driven by system. So system availability becomes critical. Then some of the common technology risks relating to core banking system relates to the ownership of data and process. So for all practical purpose, whatever data bank has, who owns it? The bankers owns it. If the data is owned by a banker, I'm referring to a section. So take it as a reverse question. Okay, you need to answer what is the question. So I say section 43A of Information Technology Act, how it is related to this ownership of data and process. The hint is that whatever data is available with the bank, the ownership of that data is with the banker. Okay. You have to see how this line is relating to section 43 capital A of Information Technology Act 2000 as amended in 2008. Just learn. We have talked about it in chapter 1 also. We discussed that. Okay. Then authorization processes. We have already taken live example that you go to a bank, you give a cash withdrawal slip, so how it processes. So what is the authorization process of a transaction in a bank? And authentication. Authentication means validity of the user. Because see, net banking, how you validate that the person who is logging to the system, he or she is a genuine person. That is important. Then, yes, several software interface across diverse networks. Very, very important. Just understand that suppose I use a Google Chrome as my browser. So I'm going to log into my net banking account through Chrome. Someone of you will log in through Microsoft Edge. Someone will log in through Opera. So that is there. So you need to create interfaces. Day before yesterday, we talked about this export and import of banking data. Like if I have to make an EFT payment in my office, I send an I send an Excel sheet in specified format to my bank branch. They automatically import that and make the payment. Bankers are sending you bank statements. So my software has capability of picking those bank statements. So a lot of interfacing of very different systems are there. And what I am talking about has to add to one more parameter to this, because these are external systems. So the risk associated has to be also be taken care of. Then maintaining response time. In fact, this is a very important point. those of you who have gone to bank branch physically, there's a display board in the bank branch. That display board says that this service the bank will provide in this much time. So suppose you are withdrawing cash 5 minutes, you want a demand draft 20 minutes. So there's a list of that. Now that is response time in terms of physical access to the banking services. Here you look for response time to online access. So this has to be managed through technology. Very, very, very important. Then user identity management, that is very critical. Who is the user? Who is the person who is logging to the banking system? That is again to be very critically managed. Access control, that we have talked about in much, much detail. So access controls, this logical access control, physical access control, because we are talking of technology solutions. So core banking system, if I do net banking, then I have a login password, login ID, then transaction password, then OTP for validating transaction. So multiple securities are built into banking system. So how I can access the banking system? So access control for bank itself. Then the next is again very, very, very important. Incident handling procedure. Now, please understand what this word means. It's again a very big topic, a chapter to discuss. Incident handling basically means, sorry, incident handling basically means that suppose something is there, that is an exception. Just as an example, let me share a very practical example. Okay. When this COVID came, okay, so being online, I'll not be able to name a company, but I know this case, it happened in a company. So when COVID came, so we all had to use sanitizers and masks like that. So in one of the company, what happened that the company was working, employee used to come to the company, they washed their hand, and after lunch, one of the employee, he or she was in habit of smoking. So that individual went outside the company to smoke. Now, it didn't lead to a critical burn, but because that individual had used sanitizer to clean his or her hand, and as soon as the cigarette was lit, the hand burned. It's a real case. Now, once this happened, so for the organization, it became incident. Incident means you need to respond to. So if any exception occurs, what is the response mechanism you have? So once this happened, then company had a very strict protocol on using sanitizers and then going near fire if you have used sanitizer. So this hand burned because it has sanitizer, that is an incident. How you respond is a handling procedure. So in terms of technology also, you find that there may be exceptions. Say, for example, someone is trying to access a location where she cannot go. So because that individual is logging to a system which he or she cannot log in, the system monitor tags it. That audit log says that this person was trying to log into this system to which the access is not allowed. So that becomes an incident. And if it is repeated, you want to have a procedure how to respond to that procedure. Very, very, very important. Then change management. Again, change management is incorporating updates, incorporating changes. Just for example, we talked about this SLR, CRR, asset liability management. So I understand you have read all these words. Huh? Please say yes. CRR, SLR, ALM. Please say yes in the chat. So CRR, we talked about cash reserve ratio. So it is based on a percentage. Now, how you meet that percentage is defined. So for meeting cash reserve ratio, the mandate is it includes cash in hand, it includes cash with other bank, it includes cash with reserve bank, it includes cash equivalent in terms of say gold bullion. Now, my system has been configured to document this calculation. But suppose Reserve Bank of India comes with a new definition that how you are going to meet your cash reserve requirement. So if say instrument is added or investment is added, which can help me meet my cash reserve requirement, then that has to be incorporated through what you say change management. In fact, I said tier 1, tier 2, tier 3. uh, when we read bank audit as a student, as you read right now, that time 20 25 years back, it was only tier 1 and tier 2 capital. Today you have tier 1, tier 2, tier 3 capital. So a new definition has been brought. So this tier 3 capital has to be incorporated in system, in core banking system. So how you do it? Through change management process. Okay. Now we have completed a topic. Let us see. Okay. So Priyanka, the issue was that now, see, please understand what is the topic. Topic is core banking system is capturing a lot of customer data. Who owns that data? Banker own. So what is the responsibility? So the link to section 43A of Information Technology Act was that it is written in the 43 capital A section. Information Technology Act 2000 as amended by 2008 says that if any organization has data that it owns, then security of data becomes responsibility of the organization. So we have linked those, the previous chapter discussion and current topic that was there. Hosema, that banker system will convert my Excel to XBRL. So not needed like that. Yes, Manoj has very good point. You need a customer charter. Great. So you said you all know about CRR, SLR, and ALM. So you have read the definition, but please understand whatever definitions are there, the compliance will only be done through what? System. So those definitions have to be incorporated in system. And if Reserve Bank of India comes with some change in definition, that becomes part of change management. Okay, now Priyanka, you have to be clear. Okay. Yes, like some your email account gives an access warning. Someone is incorrectly tried to access. Good. Then security policy. Now, again, very important. Okay, what I'll do, we'll try to create a concept for security policy. Okay. So large corporations like bank, financial institute need to have laid down framework for security with properly defined organization structure. Security policy creation is a top management job. So who creates security policy? The board of directors. Okay. So they create a policy. Now understand the why security policy is important, because bank is going to deal in third person's money. Bank is dealing, though operations are big, the operations are large. Many people, internal staff is using the banking system. External people are also using. There is an interaction of internal system to external system, and the transaction value is very high. This makes it very critical to for bank to have a security policy. So it has to be a detailed security policy ensuring compliance with applicable law, regulations, and Reserve Bank of India guidelines. Who is going to create security policy? Top management is going to create security policy. Then ISO 27001. This is a guiding standard for creating security policy. It is, I think, 10 chapters. So every organization needs to create a policy on all these aspects given. So basic security policy procedures and practices. User security administration. Just for example, what is a policy framework and how it is implemented? Just like in previous chapters, we talked about password. I talked to you that bank system require you to change password. Probably few of you did comment that the banker requires you to change password every 90 days. So to force user to change password every 90 days become part of the user security administration. So it is written in bankers policy that this is how they are going to define password. Then application security, who can log into the system, who cannot log into the system. Database security, network, physical security of assets, operating system security, network, and physical security of the operation. So it is very, very, very important. So we are just bringing the table. Give me a second. Yeah. Deepika has a good question. I like to answer that. Just allow me to complete this one. I'll answer that. So here we are. So it's a very fast run through, but it is good to read. Okay. So it says sample listing of risk and controls with respect to information security. Okay. So significant information resources may be modified, inappropriately disclosed. So what you need to have proper password policy, password controls, lack of management direction and commitment to protect information asset. Now, please understand these. See, when you imagine bank per se, so today uh, bankers are aware about it, but the trouble is what? Trouble is that you always have something that is coming new. So these gaps may always be there. So you need to have proper security policy are created and monitoring. Potential loss of confidentiality, availability, and integrity of data, CIA. When we started chapter one, we must have read about this word. I told you that this is very important. Confidentiality, availability, integrity. So you need to ensure that proper tracking of password, proper changing of default password is always there. So that is very, very important. User accountability is not established. Uh, User accountability will be established through proper unique user IDs. Then capability of user to guess password. Yes, this is very, very important. So because user can guess password, hackers can guess password, you require user to create passwords in combination. We have talked about it. So your passwords have to have uppercase, lowercase, special symbol, and a numeric. And then every 90 days you change it so that no one can misuse that. Unauthorized viewing of data, you need to ensure that access privileges are restricted. So if you see, the core is access privileges. Okay. Security breaches going undetected, it's very rare thing, but you need to ensure that whatever system is being accessed, the access log is properly monitored, who has accessed that system. Potential loss of confidentiality, physical access restriction, inadequate preventive measures for key server from fire heat, have proper environmental controls, and unauthorized system or data access, have regular updates of antivirus systems and assessment of vulnerability. So of all the points made, most of the points relate to access controls of various assets, and the last three, physical access control, environment access control, and network related antivirus control. So that is what is the issue with the ensuring that bank systems are properly secured. Then internal control systems in bank. So it talks about IT controls in bank, application software, configuration, masters transaction, core banking process, relevant risk and controls. Okay. So let me bring today's PPT. Just give me a second. So here we were, internal control system in bank. Now, so we are reading this part, internal control system in bank. There are queries. Let me answer them first. Yes. So Deepak, very good query he has. Can RBI involve instructions in change management? Understand, Deepak? Yes, RBI can, but the better way of writing it would be that RBI is the regulator. Okay. So suppose RBI revises the definition of say compliance of statutory liquidity ratio, or I shared this example that when we were CS students like you are, that time tier 1 and tier 2 capital were there, tier 3 capital by definition was not there. Now it has been incorporated. So RBI being a regulator, suppose it brings a new definition, then if I am a banker, I need to comply with the definition. If I have to comply with that definition, the modification has to be done in my core banking system. When I go for modification of core banking system, I need to have a policy framework for change management, how those changes will be incorporated. So RBI will not say that this is how you modify your system. RBI will be basically giving the policy framework, and then I have to incorporate that in my system. But beyond that, Deepak, because you have talked very specifically, see, RBI, like you must be reading that this credit card, debit card operations, lot of technology inputs are there. Then OTP is a mandate. Chip-based debit card, credit cards are there. Then there's something this all cards you use online. So to whom, whatever merchant you are making a payment, a secured payment mechanism those merchants have to create. So these are all RBI mandates which are being implemented by users of that system. Okay. So IT controls in bank, and what are the key considerations? First is very important. We've taken with live example. Work of one staff has to be checked by another staff. So it is invariably supervised, checked by another staff, irrespective of the nature of work, maker and checker. And that is why that discussion we did day before yesterday about someone talked about teller. So teller was a designated person with both the responsibility up to a limit. So just understand that the teller who was created with both the responsibility of receiving a check and authorizing the check for payment, say for a cash withdrawal up to 10,000, both the responsibility was given to that individual. So outwardly, you may say that the maker checker concept has been done away with. No, it has not been done away with. It has been incorporated in the same person, and a limit has been fixed that not beyond 10,000. So system is going to check with. And then see, as operations increase, as business grows, as the economy grows, as country grows, as macroeconomic grows, so then you allow your regulation to be relaxed. So to that extent, now you have what we discussed, that teller led to what you see today's automatic teller machines. And in fact, you can just give it as a message that does ATM have a limit on cash withdrawal on a day? So that will answer this discussion we are talking about. Does ATM have a limit on how much cash you can withdraw in a day? Okay. Then a system of good. In fact, see, this is a point that relates to the disclaimer we had in the starting of the session. Uh, Punjab National Bank Nirav Modi fraud. Okay. In that fraud, one of the key issue was that the bank employee who was part of that whole network of people who did the fraud, he or she was there in the same branch, working at the same location. His job responsibility was same for more than 6 years. It is a great indicator that that was an enabler for fraud. In fact, you can take this case. Suppose this question comes, it's a good case to refer to, that why job rotation is important. Please understand the module that you are reading. This line of job rotation has been there in this topic for more than 10 years. That Nirav Modi PNB fraud happened 5 years, 7 years back. So this concept of job rotation already had been there. Got it? So it's very important. Job rotation among staff must exist, and it does. Sorry. Then financial and administrative powers of each official position is fixed. Yes. In fact, it is configured in system. Like you just said, that ATM withdrawal 20,000 is there. Suppose you try to withdraw 30,000. ATM will say not allowed. So same way, financial powers of branch manager, financial powers of loan officers, all is incorporated in system. It's already defined in system. Then next is very important, details of lost security form. Now, see, lost security form are what? So security forms are FD receipts, DD receipts, traveler's check receipts, all which can be converted into cash. Now, lot of transactions are system driven. Still, for legal purposes, also few forms are there in nature of security stamp. Security stamps are there. So if there is a loss, then immediate advice to controller has to be done. Then branch manager must send periodic confirmation to their controlling authority on compliance of laid down system and procedure. Please understand, each branch has to send what we call as some daily reports, some monthly reports to their controlling office. So I'm just reading the name of the reports. Probably you must have read them. CTR, STR, cash transaction report, suspicious transaction report, monthly NPA, non-performing advances report, monthly TDS report. So these are the few reports which are sent by the branch to their controlling office on a month-to-month basis. So as an auditor, suppose you get a chance to audit, then you have to see whether the reports are being properly sent or not. All books are to be balanced periodically. Balancing is to be confirmed by the authorized official. We already had a good discussion on the concept of GL and SL, general ledger and subsidiary ledger. So this idea and this GLSL has been configured in core banking system also. Okay. So within core banking system, that is how the accounting within the bank is being done. So book balancing is critical. Then fraud prone items like currency, valuables, drafts, TD receipts, travelers check, other security forms in custody of at least two officials of the branch. We have just talked about it. You know what is this called? Two officials is also called as 4I principle. You can write 4I principle. 4I principle means two people, 2I, they are going to ensure that these things are properly tagged, properly controlled. That is what you call as a 4I principle. And ensure effective internal audit is carried out. In fact, within internal audit, if you're interested, you can add. So how bankers are ensuring proper internal audit. So bankers have what is being called as concurrent audit, revenue audit, stock audit. So these very different categories of audits are there, which are part of the bank's internal audit process. And bank itself also has internal inspections by their own officers. So very important internal audit parameter. Then IT risk need to be mitigated by implementing the right type and level of controls in an automated environment. This is done by integrating controls into IT. Sample list of IT related controls are, I'll read sample list from module. Now just understand that because technology is what is there. So technology related controls have to be put in place in bank system. Priyanka, 4I, EVE. Sorry, EYE. 4 eyes, EYE. 4I, EYE. Yes, good, but it's a good question. See, this confusion needs to be removed. So let us go to the module. Just give me a second. Yeah. So sample list of risk and controls. So let us just read them. We'll have more detailed discussion for business process, but this is sample risk. Okay. So interest may be calculated incorrectly. So you need to ensure interest is now automatically calculated. So now, in fact, this is what has already been implemented. This is part of now all core banking system. Then inappropriate assignment of rate code resulting in violation of the business rules. So if the rate code specified for that, now please understand, these are some technical words which have a which are predefined in banking system. So please understand, when I say rate code, what I mean. So rate code is that there are advances. Bank gives loans. So there are advances which are called as cash credit loan. We talked about it. Then term loan. So based on the nature of loan, bank system has a rate code that this loan has this rate of interest. So they will specify the rate of interest and tag it to the rate code, so that for each borrower, they need not specify the interest separately. They will only give a rate code. That is the point. So the interest rate code is defaulted at account level and can be modified to a rate code carrying a higher or lower rate of interest only based on adequate approval. So this rate code has to be predefined and it is linked. Okay. If a modification has to be done, it can only be done with a approval. So what has happened? Just take an example. Suppose I say MCLR. Have you read the word MCLR? Please say yes in the chat. MCLR. Okay. So interest rate of the bank, say for example, for a specified category of cash credit loan, for example, bank is giving cash credit loan to cotton yarn manufacturer at the rate of 10%. So all cotton yarn manufacturer get a rate of interest for cash credit loan that is 10%. But there is a cotton yarn manufacturer who is an exporter. So bank's policy allows an incentive to be given to an exporter. So for general cotton yarn manufacturers who are domestic sellers, the rate is 10%. But a cotton yarn manufacturer who is an exporter, the banker gives a 1% benefit. So for that industry, it is 9%. Then you want to lower the rate of interest, you can do it by approval. That is the point. Then absence of appropriate system validation may result on, yes. What is a business rule? So business rule is that as a bank, I will do this and I will not do this. So if you don't have control in banking system, your business rule may be violated. So validations have to be there that ensures that the violations are not put in place. Then this one is easy. Inappropriate reversal of charges. So any amount debited to the customer as charges is reversed. So you will not permit reversal of charges unless through a proper approval procedure. In fact, just as an example, we talked about revenue audit. We discussed revenue audit. So revenue audit is a dedicated audit that banker gets done for a branch to identify areas of revenue leakage. So when you go for those revenue leakage audits, then there is sometimes a reverse query comes. Reverse query comes means banker might have charged excess rate of interest. Banker ने गलती से borrower से ज़्यादा interest ले लिया है. In that case, this reversal has to be done. But then it has to be done. Then, now again understand, each cell has some technical words. So like someone has asked, I'll answer those words. Okay. So once we complete this, I'm keeping a note of all your queries. I'll answer them. So here also there is a word multiple lien. Now, before you read it, you need to understand what is a lien. So lien is when banker gives you advance against security of a term deposit or a fixed deposit. So say, for example, I have 1 crore rupee term deposit in a bank and I require a loan of say 90 lakh. So I go to the bank, show my term deposit, give that as a security to the bank and request the banker to give me a loan of 90 lakh. So when banker gives me loan of 90 lakh, they get some documents signed. I have to deposit the term deposit and banker mark a lien. You have read lien, Contract Act. So banker marks that this FD is leaned against advance of 90 lakhs so that there is no inadvertent encashing. कोई भी व्यक्ति उस एफडी को गलत तरह से एनकैश नहीं कर पाए. So lien is marked, and today that lien marking is a process that is done in system. Okay. Now, when you say multiple lien means what? That more than one lien on one deposit is done. Now let us read. So multiple lien in excess of deposit value may result in inability to recover outstanding in event of default. Now just understand, take my case itself. So I have a deposit of 1 crore. What I do, I, with bad intention, malafide intention, go to the bank and get more than 190 lakh rupee loan. So total deposit is 1 crore only, but I am able to get loan of 90 lakh twice. So multiple lien on single deposit. What will happen? The total advance given by the bank is 1 crore 80 lakh, but the total security is 1 crore. So it's a risk. Now, how you do? Read it. System need to prevent lien from exceeding the deposit value. So when you mark a lien, you have to say for how much amount. So for my normal transaction, my FD is 1 crore. The lien will be 90 lakh. But suppose I say 1 crore FD and lien is 180 lakh, 1 crore 80 lakh, system will say no, it cannot be done. So that will save the bank. Then inappropriate security or control or parameter setting. Now please understand what is parameter setting. Parameter setting are the core setting that is done in system which defines an operation, which defines a bank like that. So those settings are parameter settings. So if anyone can change it, just take a very simple example. Uh, in cash credit loan, again, I'll be using some words. If they are not clear, ask in the chat, I'll explain, but it's good to understand. In cash credit loan, my general security is my stock and my debtors. Suppose I have taken a cash credit loan against a security of my stock. So when I give a stock statement, suppose I give a stock statement of 10 crore. Banker says that whatever stock statement I submit, the bank is going to reduce margin of 25%. So if my stock value is 10 crores, margin is 25%, the allowable advance to me will be 7 crore 50 lakh. So 25% is margin, that is a parameter setting in system. Now, suppose I want to do something wrong and I take help of someone and change the parameter setting. What will happen? So against 25%, I set 5%. What will happen? I have given a stock statement of 10 crores with a parameter setting of only 5%. So I will get a loan of 9 crore 50 lakh. That is against the norms of the bank. So these settings are called as parameter settings. Okay. So access for changes made to configuration parameter setting is restricted to authorized users and verified. Yes, again, this is important. Just for your knowledge, any such change that is done in bank system, it is tagged in the audit log. Bank के audit log में tag हो जाता है. So someone will always check it. Then NRE, NRO, non-residential external ordinary accounts. If their status changes, then the valid documents have to be there. KYC have to be there to document the status change. Then inappropriate setup of account resulting in violation of business rule. Whatever account setting you do that, say for example, I am a small bank and Reserve Bank of India has given me a license that I cannot give finance against shares. Just understand, I am a small bank and I cannot give finance against a share. But then I, as a banker, make some changes that for disclosure purpose, it appears as a normal trade finance, but actually it's a share finance. That you cannot do. Then failure to levy charges, revenue loss, inappropriate security control over in system that may lead to improper classification. So these things have to be kept control about. Incorrect classifications and provisions of NP. This is very, very critical. Each line I can discuss for half hour like that. Time is restricted. So configuration, customization exists an application to perform NP as per the RBI guidance. Okay. You have read provision, as a few of you they have read and few have not read, so I'm not discussing. Okay. So non-performing asset, that definition is known to us. Okay. Failure to levy appropriate charges resulting in revenue loss. You need to ensure charges are system driven. Inappropriate charges levied, again calculated through system, and duplicate asset records created that may create issue of ownership of asset, that you need to ensure that unique IDs are used so that ownership is properly tagged for each asset. So it's a very detailed discussion. Huh? each line has lot built into it. But I'll request you, any technical word from this chart, please put. I'll explain. So we'll. I'm going back to the PPT. Yeah. Now queries. A lot of queries are there. Okay. If some softwares Parthasati has, if some softwares used by bank, can they operate interlinked to system like finance? Yeah, that bankers can do. If bank is listing Kusema in stock, so can SEBI interfere? Yeah, SEBI doesn't interfere. SEBI forces in. So SEBI is regulator for stock exchanges. So SEBI creates its regulation. So all listed company need to comply. So that SEBI can enforce compliance. To that it is correct. Then 20,000, yes, ATM I asked you, so there is a limit of 20,000. Yeah, someone said 50,000, but okay, that's okay. Then 4I, Priyanka, EYE. Okay, Manoj, see, let me do it. So suppose this pen is a critical asset for a bank, or take it as cash for the bank. So when you say 4I principle means what? When I keep this pen in a secured location, so keeping of the pen, recording of the pen, calculating of the total value of this pen must not be done by one person, it must be done by two-person. So two-person means each person has two pair of eye. So two-person will have four eyes. So that is also called as 4I principle. That's okay. So DP is drawing, this margin is also called as drawing par. So for cash credit loan, based on this stock statement, generally bankers deduct 25% as margin. So 75% becomes my DP, that is drawing par. So how I define drawing par, that is how much I can draw based on the value of stock I have submitted. That is I call as DP. Yes, Parthasarthi, MCLR, marginal cost of lending rate. So this there was a base rate based interest calculation. Now it is MCLR based interest calculation. So a lot of technology updates are coming in banking system. Deepak, it's a non-compliance. RBI is very clear that what I know right now, for a specified category of advances, a mandatory stock audit is there. So if you don't do it, then RBI will tag it as non-compliance. And believe me, today the whole way Reserve Bank of India is tracking bank, it is very, very difficult for any bank to skip that. So it's just impossible. So it has to be there. It's not an option that you don't do it. You have to do it. Okay. Then this is a very, very important discussion. This, in fact, this is going to add to our previous discussion also. Okay. So configuration, master, transaction, and reports for them. Now, so it's going to be a phenomenal. We did have some discussion in previous chapters, chapter 1, chapter 2. Here we are talking of core banking system. So I'll be creating examples. Again, ask any thing that you feel is not clear, because technicalities may come. So just keep yourself aware on that. Okay. Okay. Keep asking questions that to your learning and they add to my understanding also. Good. So now understand, see, core banking system, the chapter that we are talking about is basically an application software. Okay. So when a banker buys an application software, there are number of settings to be done. So three basic settings are there: configuration setting, master setting, transaction setting, and based on these settings, reports are generated. So what I've done, I've linked the four words on the first line of the slide. So you have a configuration setting, master setting, transaction setting, and based on the settings, your reports are also generated. We are going to have intensive discussion on each of these aspects. This is very, very, very important. And believe me, this discussion is relevant for getting good marks in examination for EIS. But if you understand this one, it is going to add a lot of qualitative audit parameter to those of you who are going for bank audit and those who propose to go once they take their articleship. It's a phenomenal discussion, and believe me, from CA Inter to CA Final, then you become chartered accountant, and all of those who are going to go in practice, these words are going to be important if you take bank audit as one of the revenues for your practice area. So it's a phenomenal discussion to learn. Okay. Now, so application software. So we are basically talking of core banking system, whether it is high-end CBS, ERP, or simple accounting software, have primarily four gateways through which enterprise can control functioning. These are configuration, master, transaction, and report. So to make it simple, for using any software, you have to define the configuration, the masters, a transaction, and report that will be used by that software user. In our case, who is the user? Bank. In our case, what is the software? Core banking system. And there are multiple core banking system. Now, because we are talking of software, that is part of your module, so we can discuss that. One of the most used core banking system in India is Finacle. It is by Infosys. Then TCS had Banks Link as their core banking system. Then FlexCube is also a core banking system. It was originally by iFlex. Company's name is iFlex. iFlex has been acquired by Oracle. So now FlexCube becomes a Oracle core banking system. So these three, they cover more than 90% of all banking business in India. The meaning is that these three softwares are used by all banks in India, covering 90% of all banking business in India. And then there are some special category softwares which are for this core banking software for cooperative bank, core banking system for regional rural bank, core banking system for district cooperative bank. So these are some small vendors also in this space of core banking system. That is how you look at it. Now let us go ahead. So configuration. Now please understand, you remember it this way: configuration, master, transaction. So what will be defined first? Configuration. Then what you will define? Master. And after that you will define transaction. Let us take it one by one. Configuration. Some example of configuration in the context of core banking softwares are given here. First, defining access rules from various devices. And let me read and then I'll try to explain. Creation of user types, creation of customer type, deposit type, year-end process, user access privileges, configuration, its management, and password management. Now, what exactly we are reading through? So what we are basically reading through is when you buy a core banking solution system, when you start operating, what are the things you need to define? So you need to define rules from various, how it is going to be accessed. So see, where my core banking system, the application is going to reside on central data server. Okay, central application server. Now, when it is residing on central server, many people are going to access. So when people are going to access, so how they are going to access, that is rules. Who can access? From whether I can access from a mobile, that definition has to be put in place. That is what you do in first part. Then creation of user types. So who will be the user? So like just for example, branch manager, loan officer, credit officer, credit card officer, debit card officer, saving bank officer, retail asset officer. So who will be the users of that core banking system? As soon as I say users, it has to be linked to the fourth point, user access and privileges. So you define the user, you also define what he, she can do and what he, she cannot do in that system. Then third is very important. Third is going to create a distinction between these three words, configuration, master, and transaction. Third one, creation of customer type, deposit type, year-end process. Now, when I say customer type, what exactly I mean? Customer type is basically the nature of customers I can create on this core banking system. So nature of customer mean what? Just take this example. Reserve Bank of India in past 5 years or 10 years has given some very specialized banking licenses. I am reading those banking licenses. They will somewhere it will be part of your syllabus. So what those banking licenses are? Say a small bank banking license, a payment bank banking license. So these are very specialized category of licenses. Now, State Bank of India also has a banking license. ICICI Bank has a license. HDFC has a license. PNB has a license. So what is the distinction? So all these banks, the State Bank, Punjab National Bank, ICICI, HDFC, these have commercial bank licenses, scheduled bank licenses, then small bank license. A lot of small banks licenses have been issued. What is the distinction? The distinction is that, and what is the purpose? Why this? So just listen to this carefully. The whole idea is that India, a country of more than 135 crore people, our people live in remote areas, remote locations. So government wants to promote what we call as financial inclusion. Financial inclusion means to ensure that most of the Indians have access to a structured banking facility. Please understand, financial inclusion is a good word. Just remember this word. You can always use it. Financial inclusion. What is financial inclusion? The intent of financial inclusion is to ensure that each Indian has access to structured banking facility. That person must not be devoid of that access. That person must not be taken for a run by what we call as money lender cartel. So the idea is to have financial inclusion first. Second, this idea of financial inclusion created a question: how to increase, how to allow more Indians to join financial inclusion. So this idea came about that large banks like State Bank, ICICI, IGFC, Punjab National, other public sector, private sector banks, they have reached a state where further penetration of these banks is a costly exercise. They going to small villages sometimes is a disincentive as per the business. So what you do, you create, because these banks have to have a lot of compliance to be done. They are big banks. So Reserve Bank came with the idea, let us have some small banks. So these small banks were created so that there will be operational size will be small, their expenditure will be small. So they will be motivated to go in deep interior remote location. That is one of the purpose. There are other purpose that is the core of the purpose. Now, if I've been able to define the necessity of small bank, let us come to the creation of customer type, bullet number 3. When I get a license as a small bank, it has some restriction. Say, because I am a small bank, I cannot do infrastructure financing. What is infrastructure financing? I cannot finance 100 crores for dam making, 100 crores for power plant making, 100 crores for road construction. I cannot do infrastructure financing. So that is a restriction. So when me, small banker, is going to implement a core banking system, I will have normal cash credit loan customer, normal saving bank account customer, but which customer I will not have? Infrastructure financing. That is point number 3, that when you configure at the start of operation, you define what category of customers I am going to have. So the core banking system has option that I can create an infrastructure financing customer, but does my Reserve Bank of India license allow me to create an infrastructure finance customer? No. That is creating a customer type. Same way, deposit time and year-end processes. See, many banks, in fact, all the banks have a year-end process. So when 31st March is there, when audits are closed, so they have a year-end process where a lot of year-end transactions are closed. Just giving an example, virtually all banks have a year-end process that we call as minimum balance charge calculation. So at the end of the year, if my account doesn't have the specified minimum balance, average minimum balance across the year, then I may be charged at the end of the year. So that year-end process is what is going to be there. Then user types, we have talked about it, the nature of user and what their rights are and what they can do and what they cannot do. And we have also talked about password management. Please understand this 5 bullet is illustrative list. There are 10 more, but that is what is in the module. Just remember, they are important aspects to be created for configuration management. Now, before we go to the next slide, there are questions which have come. Yes, Manoj, Finacle is used in other countries also. Good. In fact, because Manoj, you have talked, let me bring one aspect of that. It can be part of configuration just because Manoj has talked. So it's a good point to discuss. This all banks means the size of the bank have to be the big banks because they deal in foreign currencies. So what I know right now, mandatorily this big bank core banking system have a multi-currency option. Multi-currency option means so they are going to record transaction in Indian rupee, dollar, pound, yen, euro, Chinese renminbi, yuan, Japanese yen. So at least minimum 12 currencies they can record transaction. In fact, that also is part of configuration setting. Please understand. So suppose I am a small bank, I cannot do foreign currency transaction. So in my configuration setting, I'll not build all these currencies. But if I am a large public sector bank or a private sector bank doing foreign currency transaction, then in my configuration setting, I have to tell these currencies I am going to deal with. So Manoj, your point gives a good point to discuss. Yeah, Manu, Jan Dhan Yojana was basically, yes, very good. It was for financial inclusion. Agreed. Then, so once you have created it, then customer master. So once the code definitions are created, then this is the next. Again, this is very, very, very important. In fact, in the previous slide, when we went to the module, the security aspect. So we read about parameters. Those parameter settings are these only. So if someone changes this parameter setting, it is a disaster. So this, to that extent, from control purpose, these are very, very, very important. Some examples of in context of core banking software are customer master, customer type, detail, address, PAN detail. Understand this 4 field are again illustrative. There could be more to that. Okay, so customer type, customer detail, customer address, customer PAN detail, customer Aadhaar detail, or that photo ID, proof, what proof customer has given. Then if customer doesn't give a PAN or customer does not have a PAN, there is a concept of form 6060/61 to be filled by the customer. So all these parts are, all these definitions are part of master, customer master. Then employee master, employee name, ID, designation level, joining details, salary, leave, and you can add more details, employee PAN number, employee's TDS status. So all this can be part of employee master. Then tax master, income tax master, tax rates applicable, slab, frequency of TDS. Can you give a hint that one I want you to update? Which fourth point you want to add? कौन सा चौथा पॉइंट आप ऐड करना चाहेंगे? I want you to do it in masters. So beyond module, one point I want all of us to add. Okay. So Kojima says signature. Okay. Okay. Customer signature. Okay. Agreed. Fourth as a bullet. Then transactions. So some example of transaction in context of core banking system include deposit, advances, ECS, electronic, the ECS, the credit transaction, the general ledger, and what nature of transactions are going to be processed. So you define those transactions in this. Good. So you all are smart enough. So Kojima says we could have vendor master. Yes. Then Sumit says advanced master. Okay, I'll take in principle, Sumit. I'll agree to that. It's a good point. Yes, Pranev. So Pranev has given TCS detail, and I thought someone will say GST also. So that can also be added. Great. Now we want to discuss the report in detail. It's 7:15. So we are having a break. So break for 10 minutes. 7:25 we meet again. Now, we talked about configuration of master, configuration of transaction, and master configurations. Report is very, very, very important. Again, understand what you're seeing on the slide is just an illustration of hundreds of report that banking system generates. To make it simple, whatever fields have been created during configuration setting, master setting, transaction setting, each can be generated as a report. And there are hundreds and hundreds of such fields. So each can be generated as a report. What you're looking at is basically just a illustrative list. In fact, within this, we'll add few. Okay. So yes, table is there. So we'll go to that table. And here we are going to add few. So summary of transaction of the day that you may call as a day book. Daily GL. Yes. Understand. Suppose I say trial balance. So what is the frequency at which uh, commercial entities other than bank may be generating trial balance? You have to answer this question. Suppose I say trial balance, what is the frequency at which commercial entities would be generating their trial balance? Just say in the chat the frequency at which commercial entity generate their trial balance. Then activity logging, reviewing, report covering performance, compliance, report of exceptions. So these are reports that are generated. Then I'll request you to write this end of day reports. So exception is one. There is other reports along with that. So you can add that. So what was okay? Good. So Karthik, regulation masters for yeah. So that can also be configuration. Then Kozama says quarter, or Pranav says say 2 times or 3 times in a year. Bank is one entity that generates daily trial balance. Please understand. Bank is one entity that generates daily trial balance, and sometimes generally banking hours are like bank starts at 10 a.m. till 6 or 5:30. The customer interaction is 11 to 4. So 1 hour prior to that, bankers do their job. After 4 p.m., bankers do their job. Sometimes, rarely it happens that probably a branch near your home or near your office, and while you are going from office to home at 8 p.m. in the evening, you find that a branch is there where the lights are on and people are working. Believe me, most of the time the bank branch is open because their daily trial balance is not tallied, and there is they are doing that tallying of the trial balance. So bankers have to generate a daily trial balance. That is point number 2 of the bullet. Okay. Yes, daily, Karthik. Good. Then risk, we have talked about this, the risk with respect to control table 5.35. So that is then core business processes, relevant risk and controls. Again, lot of discussion we are going to do here. Okay, so lot is there in the module. We'll take help from the module, and lot of discussion we are going to do here also. Just give me a second. Yeah. So that table we have been through. This is the topic we wish to take. The core business process, relevant risk and controls. So banks carry out variety of functions, including current account, saving account, credit card, loan. So business process flows and their risk and controls. So first will be business process flow and the related risk. Business process flow for current account, saving account, risk and controls around current account and saving account. The business process flow for current account, saving account, the first. So these topics we are going to talk about. Lot of discussion has to be there. Now, process flow. So the bank. Now, just understand what you are looking at. So we are looking at the first transactions being done by the bank. That is opening of a current account or a saving bank account. Now, what you can do, so there are headers and all of you have opened a saving bank account in some bank. So what I'll do for each step, we'll create a number and then I'll ask questions. So each of you are going to answer that in the chat. Okay. So first, process flow for, so what you are reading, process flow for current account and saving account. Application from customer. So this is number one. So application, you can say application and did you submit it? You say yes. Okay. So application, yes. Then documentation collected from customer. Now here, this is DOC, second. So I want you to write here in the chat what documents you submitted while you opened your saving bank account. Documents submitted. Okay. So you have applied for opening a saving account. You have given documents to open the saving account. Then what happens once you do it? So your application and your documents are handed over to the credit team or risk team within the bank that makes an analysis of the documents submitted by you for opening a current account. Once those documents are verified, so verification is done. In fact, I'm asking a question on verification of documents. Okay. So you have to say verb, VER. When you submitted like copy of your Aadhaar card or PAN card or passport or driving license or voter ID, then did banker ask you to show you the original? आपने जब अपने आधार, पैन कार्ड, पासपोर्ट, वोटर आईडी, ड्राइविंग लाइसेंस या ऐसे आइडेंटिफाइड डॉक्यूमेंट की फोटोकॉपी दी, तब क्या बैंकर ने आपसे ओरिजिनल मांगे? डिड बैंकर आस्क यू टू गिव द ओरिजिनल? एंड सो यू हैव टू से यस, वी आर ओरिजिनल. Then once that verification was done, your account is opened, and based on the account you open, customer can use number and numerous functions. For this, we'll go to the table, but let us see your answer. So application, yes, good. Then, so Manoj says PAN Aadhaar, Kojima says name, address, PAN Aadhaar. Okay, so I was interested in document. Then Karthik says proof of identification and proof of address. Okay, so POI is proof of address. So that could be Aadhaar. Proof of identification, PAN, as banker may take it. Aadhaar. Then verification, Manoj says yes. Yes, they ask for originals. Yes, they ask for original. Karthik, Manoj, Pranay. Application, yes. Document, Aadhaar. Father's Aadhaar also, Pranay. Parthasarthi, original, yes. Okay, so on verification, one Mitesh says KYC document. Mitesh, you wanted name of the KYC document. Okay. Or so this is how Mitesh is a smart student like that. So he has answered the question correctly, but then the answer is not full. And that is why we complain sometimes that we are not getting marks. Okay. So Mitesh, we wanted the name of the document. Now, the next point. So when you showed the original, you know what the banker did? So banker has a seal that he or she puts on the photocopy of the document. the seal reads verified from original. बैंकर ने एक सील बनाई हुई है, उस पर लिखा हुआ है इस फोटोकॉपी को मैंने ओरिजिनल से वेरीफाई कर लिया है. The respective bank officer, he or she, puts a seal and signs that. So that is one of the aspects of verification. Okay, then Mitesh, right now we are in current account. When you go to loan, you answer CIBIL. It is current, Mitesh. Okay. So now Mitesh says Aadhaar, PAN, mobile number, passport photo. Yes, that is correct. Good. Now we go to the module for risk. And so this is going to be a phenomenal discussion, risk part, lot and lot of addition. And now what I'll be wanting to you to do in the module, please understand that. So fast run through. For current account, saving account, so customer. So first is making an application, then branch, the risk manage, resident manager basis the customer request, proceeds, or relationship manager, RM can be anything. So KYC is know your customer documents, then customer request sends application for the credit risk. So risk makes an assessment, approves, rejects. Once approved, then you get the account open. So this is the flowchart of the way customer account for saving bank is opened in a bank. Okay, so that is easy. This is important. So we'll have a detailed discussion, the credit line, so risk and key controls. So keep yourself aware. This is very, very important. Again, for academic, for doing good qualitative bank audit, as a CA student, as an article clerk, giving a quality delivery to your boss, and once you become chartered accountant, as a practicing CA. Very, very, very important. Yes, Manoj, the verification of Aadhaar is digital. Very good. OTP, fantastic. Now, credit lines. So what is the risk? So please understand. So we'll have to, I'll be adding some description to the risk, and then we'll go to the control. Okay. So credit line setup is authorized, is unauthorized, and not in line with bank's policy. So the customer whose account has been opened, his credit line is unauthorized. Unauthorized means not in line with bank's policy. So for example, the customer, the nature of account the customer has opened. So to that, the number of transaction he, she can do, the number of checkbooks in a year he, she can get, the additional facilities, what, so that is not as per the policy. How you keep a control? The credit committee checks the financial ratios that based on the details received, the net worth, the risk factors and its corresponding mitigating factors, the credit line offered, credit amount is in line with credit risk policy, and that client can be given a credit line. Now, generally, this is not going to come as a part of saving bank account requirement, but this can be part of any other account also. But the point is important. So how do you read this in case of saving bank account? The category of customer, the nature of facilities banker is going to give. Then the credit line set up in core banking system. So this first was in relation to the customer. Now in for core banking system itself is not in line with bank's policy. So excess rights to authorize credit limit in case of account setup should be restricted. Now I have a point to make to you. Please understand this is important. Here you are reading the risk for core banking system. Here it is saying excess rights need to be properly defined. If this is the case, please understand, if this is a case, this indicates disaster in respect of the top management's understanding of controls, top management understanding of risk. If top management doesn't understand that these definitions have to be created, it's a disaster. It is also an indicator that the whole core banking system has been improperly set up. Because if you're not defining your credit line in core banking system properly, it's a huge disaster itself. This also means lack of awareness. Now, why I'm talking like such? Because I want this to be linked to, suppose you're auditor. We are learning. We want to do an audit. Suppose you come across this point, the one I'll just highlight again. Which auditing standard will be hit? You are going to report this within the framework of which very specific auditing standard. I have given you a lot of hint. Got my point? I want to name the auditing standard within which this aspect you will bring to the knowledge of top management. That is how you look at it. Once you answer, we'll come back to this point. Then, customer master defined in core banking system is not in accordance with the pre-disbursement certificate. Now, again, please understand that the idea about disbursement is not relevant for a saving account, but much more relevant in terms of the whole banking that is being looked into. Okay. So, whatever definitions you are creating in customer master, it has to be as per the policy for that category of customer. That is what you need to read through. Again, excess right need to be restricted. And this again, inaccurate interest charge being calculated in core banking system. So for a saving bank account holder, you are not going to charge interest, but you are going to charge bank charges. What charges are debited to a saving bank account holder? I'll read them. So charges debited to a saving bank account holder generally include checkbook charges. Then there's a ATM. Suppose you withdraw for ATM more than 5 times to a third bank ATM, then those ATM charges are debited. Then if you do not maintain minimum balance, if the banker requires minimum balance to be maintained to the category of bank account you're opening, then minimum balance charges are to be levied to your account. So whether the charges levied to that saving bank account are inaccurate in core banking system. Let us read. So I read this interest as charges. So interest on fund-based facilities is automatically calculated in CBS. Please add a line right here. Interest slash charges on current account, saving account facility are automatically calculated in CBS as per rule. Because we are for a current account, saving account, interest will not be a parameter, charges will be. So they are also predefined in system. Yes. In fact, just sharing, not naming the bank, but in one of the banks during course of an audit, we found that within the bank core banking system used by that bank, which I am sharing about, there was an option that whether charges to be levied to this account, this category of account. So that option had to be yes. We found that option was no. So just understand so much importance this configuration settings carry for all of us. Okay. Then unauthorized personnel approving the current account, saving account transaction in core banking system. Again, please understand the way core banking systems have evolved over the period. This must not be there. Let us look to the control. Segregation of duties need to be maintained between initiator, authorizer of transaction for processing transaction in core banking system. Please understand, what you can do is add a present status like, see, this is a control that is defined. It's good. But then you need to multiply by how we are evolving. So we have already evolved. So this whole idea that the maker checker concept is not there in banking system, this idea doesn't exist today. Present situation is that all that has been very well has been incorporated in banking system to a reasonably good level. What you are looking at is a minuscule risk that remains very rare. Okay. But still, because this risk is not zero, so we are reading it. But please understand that this idea about maker checker is very well built. In fact, just for sake of understanding, all core banking vendors, we talked about Infosys, TCS, iFlex, now Oracle, and other core banking software vendors, when they promote their products, when they create a marketing pitch for the product, suppose I am a banker and these vendors will come to me, they will tell me that all these configurations are there. So this risk to that extent is minuscule, but not zero. That is why I'm talking about it here. First. Second, within banking system, there is an option of delegation of authority. So, for example, a branch manager, he or she is going on leave. So his authority as an officer, he or she delegates to the next higher official. So because delegation is there is a chance of delegation going improper. Then this risk is again going to come. So this risk is relevant, but the operational area of risk has been reduced to a lot of extent. Our core banking system has phenomenally evolved in last 30 years. And someone did ask, I think Manoj asked, that is, are our Indian companies' core banking system used across the world? The answer is yes. Okay. Next is critical. Inaccurate accounting entries generated in core banking system. Now understand, inaccurate accounting entry will mean what? So inaccurate accounting entry will mean that a transaction has to hit a GL code, a subsidiary ledger code, and it is not hitting that GL code and SL code and going somewhere else. So again, it's a disaster. Okay. That means that the definitions have been very inappropriately created in system. Let us read. Accounting entries generated in core banking system based on facilities requested by customer and basis defined configuration for these facilities in core banking system. Please understand, if this is happening, there's a phenomenal gap in mapping of the core banking system, the way it has been configured. So this requires a detailed audit of the configuration setting, how it is taking this. So it's a disaster. The impact is huge. Okay. But the risk is there. So that is why we are discussing it. Great. Pranay, good. So I want to give e-chocolate to Pranay to ask this question because I wanted someone to talk about credit line. Now, see, credit line is exactly what, so I'm sharing it with a very different example. See, credit line and saving bank account don't go together. So where does credit line take its color from? So I'm creating a simple example. Understand debtor. Okay. So I'm asking this question for learning. Debtor in my books will be asset. Okay. Debtors in my books is an asset. Okay. Saving bank account in bank books is asset or liability? Answer this question. Debtors in my books is an asset. Saving bank account holder in bank books is asset or liability? Okay. You answer that question. Now, so because debtors is an asset in my books, I am selling product to that customer. So when I sell the product to that customer, I want to keep a cap on how much I sell and for what period I want to give credit to the customer. So suppose I keep a cap of 1 lakh rupee for a specified category of customer, that to this individual, I'll only sell product up to 1 lakh. That means I'll not dispatch unless the 1 lakh rupee payment is received. That becomes credit line. How much credit I'm allowing. Second credit line could be in terms of the period. Say, for example, I am selling to the customer. I've sold rupees 1 lakh product. And our understanding is that the customer is going to make payment within 30 days. So I've extended a credit line of 30 days to the customer. So the whole idea about credit line basically links to my asset side of the balance sheet. Let us see what you have said to the saving bank account. Yes, liability. So credit line doesn't match very good with the saving bank account per se. Okay, because saving bank account will not require a credit line to be given by a banker. Okay. But the idea that the system has to be set is correct. So that is why this has been brought here. Okay. So I've answered credit line. Then, yeah, message charge. Kojima, I missed that. Good. Thank you. Nafisa says, so Nafisa is a new student today. SA 315. Good. 315 is good. But I want to give this e-chocolate to Pranay. Pranay wins 2 e-chocolate today. SA 260. Communicating with those charged with governance. Please understand. this is a disaster. So it has to be communicated within SA 216. Great. And of course, SA 315 is also relevant because it increases the risk factor to a phenomenal level. Yes, Khojema. So it will go with a cash credit account. Good. So very good point. So another e-chocolate to Khojema to make that very good link. Puranev, you have to imagine in terms of a banker. Okay. So you need to imagine with terms of a banker. Okay. Yes. Good. Going to the slide. So that was for the customers. So I did have, we have got all the questions and queries answered. Great. Let us go to the next one. Then business process flow for credit cards. So we'll take all this from the module, credit card. Yes. Is it 320? Okay, so take that. Hmm. So most of the discussion for credit card is from the module. Okay. How many of you have a credit card? How many of you have a credit card? Say yes in the chat. Okay. Now let us read. So I'll just do a very fast reading of this. Okay. So uh, so either the customer approaches the RM, relationship manager, to apply for credit card, or customer will apply the same through internet banking. So it can be both ways. Banker can approach you and you can approach the banker. In fact, those of you who might have traveled by air sometimes, when you deboard and land at your destination, so from the when you're going exiting the airport, so at the just near the exit gate, you have someone saying you that this bank is giving you a credit card. You have to only share your boarding pass. So that is how things are evolving. Ah, Parthasarathy has a credit card. Good. Office also has. Manoj also has. So claps to those who have credit card, because credit card basically is given to those people who show earning. So I think you are all doing articleship and earning. So you've got credit cards. Good. That is great. Once you become once those who are not in articleship, they go into articleship and then you will get it. Great. So first is the approach. Second, once the customer agrees for availing, then the relationship manager requests for relevant documents. So KYC, like someone said, so you have to give KYC documents. The documents received from the customer are handed over to the credit team for sanctioning of the facilities and limits. Now, here that idea about limits work perfectly because, okay, let me ask this question. Suppose as on 31st March of the year, you have a credit card of the bank and you have expended 50,000 rupees on the credit card and due date of payment is 5th of April. So till 31st March, you have 50,000 rupees that you need to pay to the bank because you have availed the credit card facility. That 50,000 will be appearing in which part of the balance sheet of the bank? As an asset or as a liability? Have I made it clear? The bank has given you a credit card, you have expended 50,000 rupees. The 50,000 rupees are payable by you on 5th of April. As on 31st March, the amount that you have to pay that is due by you to the bank, that is going to appear on the asset side of the balance sheet or the liability side of the balance sheet of the bank. Answer that then will come. Okay. So yes, Kusema has already answered correctly. We only wait for the first correct answer. So it is an asset side. So when that point goes on the asset side, then this concept of credit line comes. So in this discussion, when we go to the risk, if the topic of credit line comes, then that will become very, very relevant. Okay. Then what we'll do, uh, we'll add some present aspects because see, over a period of time since last 25 years, credit card business has evolved to a phenomenal level and lot of updates in technology term, lot of updates in terms of regulatory framework for credit card has been put in place. So we'll add something more. Great. So Kozema, Manoj, Pranay, Nafisa, Patsarthi, all said correctly. Good. Then, so once based on that, now see, just understand when you talk of limits, so these limits have to be linked to the nature of customer. So how the point that I made was that once you start earning you get a credit card. Why? Because it has to be based on your financial status. So that financial status may be reflected by your earning. That financial status may be reflected by the mode of travel. I said air. If you're traveling by air, that financial status is also reflected by your social network uh, update. So if you have say 1 lakh followers, then you become eligible because many people follow you. So there are a lot of parameters. That is why I told you that we'll add something more to this credit card. A lot of technology innovations have been brought. Okay. Then your documents are verified. The credit team verifies the document, assesses the financial and credit worthiness of the borrower. In case, see, you are like a borrower and issues a credit limit to the customer in core banking system and dispatches the credit card. Credit card is then physically transferred to the customer's address. So here is the process. Same as very smartly the flowcharts have been designed so that singular flowchart parameters can be used. So applies eKYC is done. Now eKYC, yes. So this is a new word. I think we all understand. Someone did say OTP validation of Aadhaar. So that is good example of electronic verification of your customer documents. Then your application may be rejected, approved application. Then the credit cards are dispatched to you. Yes. Now, Parthathi has made a good point, a very good chocolate winning point that if you want, you can get a credit card against the security of your FD. The answer is yes. Yes, some FD is Manoj. Yes, both. So this chocolate goes to Manoj and Parthasathi both. You can get it against security of FD. See, understand it. So if you're not earning, but what is the banker's core issue? Bankers want security. So if you are earning, your earning is a security. If you are not earning, your FD becomes a security. So they need security against that credit card that they are issuing to you. Then process flow now. So issue of credit card, what I want you to add is that a lot of financial technology companies are there, which are where banks are using financial technology to issue credit card. So basis of issue of credit cards are evolving over a period of time based on your social network presence, based on the mode of travel you have. So this is an evolving phenomena. And please understand when these financial technology companies or banks issue credit card based on the social networking you have, lot of data analytics and artificial intelligence is also built on the back end, and then that evolution is done, and then those credit cards are issued to you. Okay, then process flow, customer will swipe the credit card for purchase made by him her on point of sale machine at the merchant shop establishment. We have talked about again an evolution of technology. Swipe is not a necessity. You can tap your credit card, so you have Wi-Fi enabled. Please update that, add that. Okay, technology is there. So whatever written is always good, but it's an evolving process. So I want you to write in point one that now you have credit card which are Wi-Fi enabled, which can be swiped. Not physical swiping is not there. You can tap it on the machine. We have already talked about, many of you have said that tap credit cards had inbuilt limit 2,000, 5,000 rupees. You can need not uh, you cannot increase beyond that because of risk associated with tap credit cards. Then I have told you that when you put your PIN number at the point of sale terminal on which the machine your card is swapped, always cover the keypad with hand and then put your PIN number. Okay. So once POS will process the transaction only once the same is authenticated. So once authentication is there, the process goes ahead. The point of sale terminal will send the authentication request to merchant bank, the acquiring bank, which will send the transaction authentication verification detail to credit card networks such as Visa, Master, MX, and Rupee credit card. So these are the credit card issuing companies which validate all the transaction, from which data will be validated by credit card issuing bank within fraction of seconds. In fact, let us do something more on this. You I told you to read financial daily, make it a habit. So in those financial daily, once you start reading, you find that I've been finding it that virtually every day read a credit card, debit card fraud. Someone has withdrawn from my bank account. Now, we are not going to the reasons of that right now, but when such a thing happens, I have been listening to that advertisement on FM radio also. Reserve Bank of India is training people, training users of credit card, debit card, that whenever you find an unauthorized transaction that is linked to your credit card, debit card, immediately block your card. So by sending an SMS to a designated number, you can block your credit card or debit card. In our case, right now, credit card. Now, when you block, exactly what happens, you can read in point number 3. So once you block your credit card, suppose someone swipes it at a customer point of sale terminal at a say departmental store. So this information will go to this credit card issuing companies whose names are here. You have already blocked the card. So this is not, these companies will decline that payment. So blocking is where these companies, their database ensures that the block card are not processed further. Then once transaction is validated, the approval message is received from the credit card issuing bank to the network and then flows to merchant bank and approves the transaction in POS machine. Please understand this 3 point, the time we are taking in reading, the whole transaction is executed within less than a second. In fact, 1/5 of a second it is executed. The receipt is generated, sale is completed, the transaction made is charged during the billing cycle of that month. So billing cycle is the next topic we are going to read, but let us read your queries. Yeah. Okay. Then the process flow for settlement. The transaction data from merchant is transferred to merchant's bank. So now, so here is a merchant and the bank. So it goes to the merchant banks. Merchant bank is the person who is giving banking services to the departmental store. Clear settlement amount to merchant after deducting the fees. So credit card operation, the merchant banker charges some nominal amount to the merchant and then pays the amount. This merchant bank in turn now provides a list of settlement transaction to credit card network. So here is the merchant bank. Merchant bank has made the payment to the merchant. Now because his cash is involved. So this credit card network. So this is a centralized clearing agency where all merchant banks credit card transactions are collated here. It provides the list of settlement transaction to the credit card network, which then provides list of transaction made by customer to credit card issuing bank. So this credit card network will send details of all transaction of a specified credit card or a customer to the issuer bank. That is why on your credit card, you always have at least two names. One is the issuer, that is generally a bank, and second is the merchant, that Visa, Rupee, and the credit card company. So that is the credit card network. Then the credit card issuing bank, based on the transaction made, clears the amount to merchant bank, but after detecting interchange transactions. So as soon as the from credit card network, the detail goes to the credit card issuing bank, it makes the payment to that whole network. So the payments are sent to the respective merchant banks. So the merchant bank receives the payment from the credit card issuing bank. At the end of billing cycle, generally monthly credit card statements you receive, the issuing company charges customer credit card account with those transactions in CBS. You get a core bank, get a bank statement. Based on that, you make the payment to the your credit card issuing bank. So this is how it is going to be processed. So the credit card network, the sale process, and clearing and settlement. So this is how the whole transaction is processed. Then we want to go to the next very important topic, that is risk. So just waiting for any query? None. Great. So let us go to the next topic, that is risk. Now this will be more clear. Let me bring the first para together. Okay, yeah. So credit line setup is unauthorized, not as per bank. Now this is clear. So in this case, because the credit card owner, he or she is going to get a credit, an advance, then it has to be as per the financial ratios, income statements, net worth, and risk factors of that specified customer. Here, the control becomes important and critical to exercise. So, the credit line offered in the credit amount is in line with credit risk policy, and the client can be given a credit line. So, this becomes important. This is critical. Here, it has to be as per bankers' policy. Now, just understand that suppose someone makes, okay, we'll talk about in parameter setting. So right now, this is the credit you can give to the customer. Say, like someone said, 25,000 credit limit on his or her credit card. So whether it's 25,000, 50,000, 1 lakh, 2 lakh, 4 lakh, 5 lakh, 10 lakh, based on the nature of customer you are. Then credit line setup is unauthorized and not in line with bank's policy. So that was customer, and this is a general setting. So access right to authorized credit limit in credit card system should be restricted to authorized personnel. Say I want to share a big banking fraud that happened in a transaction relating to this. So what the fraudster had done for a specified category of credit card, for example, for specified category of credit card, whatever credit line was there, the fraudster was able to modify it. So suppose the credit line was 10,000, the fraudster was able to make it unlimited. Please understand. And huge fraud was done. It was not much can be shared here, but that is an indicator of the capability fraudster have if they can gain unauthorized access to your systems. Phenomenal. Then, where the masters defined for the customer are not in accordance with pre-EIS. This is again important, very much relevant for credit card customer. So when I say pre-disbursement certificate, so for a credit card, if as a banker I am issuing a credit card, so my pre-disbursement certificate will basically include. Now someone said CIBIL. There you can take CIBIL based on my CIBIL score, based on the analysis of my net worth. So I will have a sanction certificate. This is the maximum limit that can be sanctioned as per pre-decided criteria. In fact, all banks which are issuing credit card, they already have technology systems where you start giving parameters, it starts calculating how much sanction, how much credit limit can be offered to this customer. So that becomes part of the system itself. Then So what you need to have access rights to authorize the customer master in credit card system should be restricted. To authorize personal SOD segregation of duty exists in credit card system such that the system restricts makers having checker rights to approve the facilities booked by self in credit card system. So you need restrictions. Again, the nature of restriction is access related. So if you read the three, I'm just going up again. First, second, and third. So all things relate to how the access rights are given. Then this is credit line setup can be breached. So, see if my credit limit is 20,000 or 25,000 as the case may be. The risk is it can be breached. What is the control? Let us see. Transaction cannot be made if aggregate limit of outstanding amount exceeds the credit limit assigned to the customer. Yes. In fact, every time you use a credit card, so your banker sends a SMS to your registered mobile number. Let's say 100 rupees you have paid on the credit card, 500 is the total payment you have done, and 24,500 is the balance limit. Now, suppose the next payment you want to do for 25,000. 500 you have consumed and next payment you want to do for 25,000. The credit card network, when it is validating the transaction, it automatically declines it. Why? Because it is exceeding the customer limit set for customer. That is how it works. Then, inaccurate interest charge being calculated in credit card system. Now, understand, because credit card involves bankers' funds. So today, the core banking systems are reasonably well configured. Whatever interest is charged, all is defined in system. Last is very, very important, inadequate reconciliation or inaccurate reconciliation. Today, daily reconciliations are done in system level itself to ensure that the inaccuracy is not there. Before we go ahead, queries. Pranav has a good query. Sir, because transaction has occurred, how do we block? So that is a valid point. So the point is that, see, as soon as the transaction occurs, you immediately get an SMS, and banks have sending an SMS that if that transaction is not done by you, you immediately inform. Now, see, the time you take to inform, because the SMS you get on your mobile is immediate. The number to which you can call immediately is also in the SMS. It is already linked to that. So if you, how you can do it? So if you immediately inform, what will happen? Your card will be immediately blocked the next second. So I've been listening to that advertisement on FM. It says that if you do it within one day, 2 day, or 3 day, as the time may be, so there's an inbuilt insurance in that whole process based on the bank and the policy and the agreement you have with the credit card issuer. So first, it saves you from the next fraud. And second, that if you immediately inform that, suppose the person who is using it fraudulently, he or she is in the same, he's in or she is in the store, he or she can be caught. Of course, if online misuse of credit card is there, catching that person will be tough, but it is going to save you from a larger risk later on. So I agree to that point, that how do you block once transaction is, that transaction is done. So that transaction is a singular loss to you. Subsequent, you will be saved. That is. Okay, good. Karthik, see the date, the validity period of credit card, debit card is say 1 year, 2 year, 5 year, based on your nature of credit card and nature of business that you are into. Why it is like that? There has to be some regulation, but I will not be able to tell for which credit card the period is 2 years and 5 years and 8 years like that. But it's good control, so that, because see, you have that CVV number at the end of it. So over a period of time, that in a new credit card, you get a new CVV number to work upon. That could be a reason. No. It is Kuzema the point. Kuzema has made a point. Let me read it. If bank gave the limit to customer higher than his or her CIBIL score, and customer declines to pay the exceeded amount of CIBIL score. So what? No, no. Please understand. When bank gives you a credit limit, it takes an acceptance from you. So what you have said is an impossibility. Kozema, have I put it correctly? Just for example, suppose take it as only as an example. Say, suppose my credit card limit today is 5,000 rupees, and tomorrow bank fees that that credit card limit can be increased to 10,000. So it says, do you want to increase limit to 10,000? I say yes. So before I say yes, it asks me to sign a form. So it's an impossibility. Okay. Okay. So we've talked about this. Now mortgages. So we are on 816. So see, the MCQ for today is reasonably good. Okay. So let us take that MCQ and then we'll continue. If time remains, we'll continue with this, or we'll take this on the last day of this whole class of EIS. So I'm bringing the MCQ. Just give me a second. Please read it through. So I'll read that cash rate limit of 50 crores, rate of interest, marginal cost of lending rate plus 2% margin on a quarterly basis. Term loan of 25 crores, rate of interest 8% per annum. A letter of credit facility of 25 crores. Banks board decides the applicable base rate on monthly basis. So base rate for that marginal lending rate. Same is updated in bank's CBS by the last date of the month to be calculated, um, to be used for calculating payable interest in the next month. RBI updated repo rate on 4th May 2022. Repo rate is a rate at which banks borrow money from RBI. So if RBI increases repo rate, banks borrowing rate increases. This will increase the marginal cost of lending rate for the bank. Now let us go to the questions. So now you have to say, so I've kept the case on the left and the question on the right. You have to say A, B, C, D. So always write the question one, A, B, C, D, like that. So to show the right answer, I'll wait for two updates. So one we have, I'll wait for one more and then we'll show the answer. Term loan. So term loan has the fixed rate, 8%. Cash, what is, if it is not fixed, then what it is floating. How do you see it is floating? Because these indicators are there, MCLR, it changes, repo rate will increase MCLR, so the rate of interest will change, that is. Yes, so one B. This we discussed. So question two. So question two, we have Nafisa and Pranav. Yes. Letter of credit. Good. Yes. So then Karthik, Manoj, Kozema, Parthsathi, correct. Okay. So yes. So who said Dia? Manoj. So this chocolate has to go to Manoj. Good. So Manoj and Kozema, yes. So 50 cash credit, 25 term loan, and letter of credit. That is also facilities. 100 crores. Yes. The question is total facility. Yes, 100 Karthik. Sumit also correct. Yes. Nafisa, 100. Yeah, good. Good. So this you have Kozema, Partharthi, Karthik, Manoj, all correct. Great. So, okay. So we have to read the keyword is best defined as. So let us see what is the best definition. Yes, two factor. Login is good, but best definition is it's a two factor authentication. Password and OTP. Yes. Good. So Kozema, Manoj, Karthik, Sumit, Pranay, Nafisa. Good. Update. Fantastic. So I've created these linked questions. Okay. Now see, I don't, you have this interpretation of statutes I don't know. So interpretation of statute says ejusdem generis. So if a specific answer is there, it will prevail over a general answer. So it's giving you hint which has to be correct answer. Yes. So concurrent auditors, like someone said B, Pranay, Manoj, Kuzema. So this concurrent auditors are also expected to identify revenue leakages, but best is revenue audit. Yes, operational, great, all correct. Karthik, Manoj, Parthasathi, Kuzema, Mitesh. Pranay, Sumit, they are also correct. Ninth, yes. Masters, good, very good. So Manoj, Kuzema, Parthasathi, Karthik, Mitesh, Bhai, Pranay, Sumit, all correct. So borrower, in fact, in the example, borrower has both fixed and floating. So 11th C. Yes. Let us just refresh for the correct answers. Yes. So it is Kozema, Sumit, Manoj, Karthik, and Parthsarthi also. Good. So that is for today. Any questions? Then we'll meet the last session for this whole set of class on 19th. Yes. Any queries you have? 30 seconds for that. Okay. I'm just refreshing and then we'll close. Pranay, good. So floating is basically changing rate of interest because your marginal cost of lending rate is changing. That is. Means I've related it to the question at the case study. Even if you look at the question itself, forget the case study, just look at the question. So borrower can have any one of the following rate. It can be both. Ah, ah, ah. Okay. Yes. So exactly on time. So that is here. Thank you. Uh, we'll meet on 19th. Bye. So we are closing.